Today's episode, we're going to talk about avoiding debt and debt relief for entrepreneurs and business owners. All right, so let's talk about this. This is a topic that I feel like you don't hear people talk about a lot, right? Everybody's talking about the bells and whistles of doing this and doing that and growing your business and all the fun and exciting stuff. But you don't often hear about people talking about the scary side of entrepreneurship, right? Or scary side of owning a business. And that's when you have debt, right? And so there's a lot of people that find that they are really excited and gung-ho about starting their business, and then they get into it, and 6 months into it, they've blown through their entire retirement, their 401k, they're just almost destitute, right? And so I myself was in that situation early in my 20s, really excited, and what you realize is, and I say this all the time, and I'm going to trademark it, put it on a t-shirt, and sell it all over the place, but the dream dies when the bank dries, right? And so whatever it is that you started, whatever it is you were excited about, oftentimes what I find is that it becomes your nightmare now. And you're like, why did I ever do this? What was I thinking? So on and so forth. So we're going to talk. And if you've caught this video early enough, because I don't want to just jump into just talking about how to deal with the debt. I think the most important aspect, and this sounds, okay, I'm not beating up on you if you're in debt, all right? So just bear with me here. But the best way to not get pregnant is to not do what, right? You know where I'm going with that. So the best way to not get into debt is don't get into debt, right? Don't find yourself in that situation to begin with. And so oftentimes what I find is that people are not avoiding debt like the plague, right? They're just getting way too cavalier about just taking on personal credit card debt or about taking out a personal loan or whatever, because this idea that they have about what they want to do, they're so excited about that they kind of lose rational thinking, right? So I would say this: do whatever you have to do to avoid debt. I've talked to hundreds of entrepreneurs at this point on my podcast, Entrepreneur Hour podcast, and majority of them will say, oh my gosh, like I made my life so much harder than it had to be just because I got myself into debt. It's so much harder to get out once you've gotten in. It's like losing weight, right? It's easy to put it on. You're like, man, I didn't even realize I put on 15 pounds. And then losing it takes you years, right? You're like, this is so hard. I feel like I just put it on and didn't even notice. Now I'm trying hard and I can't lose the weight, right? So it's the exact same thing. And then when you talk about interest and stuff like that, on top of the fact that you don't know when you're going to actually reach the peak of your earning potential if you ever get to that point with your business, right? So here's the thing: slow down, all right? Slow down. We grossly overestimate what we can do in a year, but we underestimate what we can do in 10, okay? So whatever's going on in your life, if you feel like, I got to go for it, there's these people, there's this unique opportunity in the space right now, in whatever market you're in, where I can go capitalize on this and I can leave my job and do everything I've been dreaming about and so on and so forth. Yes, that's all well and good, and I'm glad you're excited about that. Slow down, all right? Because what I found is that people that make a slow transition, people, not that they're not urgent about it and not that they're not committed, and we're going to talk about that, but they're very strategic about knowing, look, everything in entrepreneurship takes twice as long as you think and costs 3 to 4 times more than what you think it's going to, right? So we tend to operate as entrepreneurs being excited and gung-ho about whatever it is that we're doing with a very, very optimistic perspective, with a very, very optimistic mindset. And what ends up happening is that gets us in trouble, right? So what I often do is I create a spreadsheet, right? And I put in, here's what I think, sunny day scenario, what we're going to do, right? How many customers we need. I run the numbers, right? Here's what I'm currently making. Here's what I was currently making. Here's what we need to make. Hopefully still is what you're making. I would suggest definitely at least working on your business before you just jump into an endeavor full time. I think that's a huge mistake a lot of people are making. We're going to talk about that in a second. But get a basic spreadsheet. It doesn't require you to be an Excel wizard. You can use a basic Google sheet if you don't even have Microsoft Office anymore, and just run some preliminary numbers on that document, right? And just put in, this is how many customers I need. This is what I'm planning to charge. These are the marketing costs, and just take guesses, right? Like, it doesn't have to be really finite, but it's going to give you a realistic perspective, right? Because you need to be challenging yourself here, right? And so sometimes people need to give themselves a push, but sometimes people like me that are just jump off the cliff and figure out how to build a plane on the way down can get ourselves in trouble with this. You know, so always reverse engineer it, always look with the end in sight. Here's what I want to make, and this is what it's going to take to get there. So let's say you make $60,000 a year. Reverse engineer that. Let's say people in your market, maybe you do some research and some phantom calls and stuff like that, and you figure out that the average person is charging $150, right? So figure out how many customers you need to serve to be able to make that same $60,000, but also include your expenses. And oftentimes those expenses are going to be a lot more than what you think they are. There's going to be unforeseen things. So always put a little room for margin. Live your life as an entrepreneur by margins. That is a rule and a principle that I live by, right? Time margins, money margins, etc. Everything you do provide buffers and margins, right? And so in this case, provide margins for error, right? For expenses that you didn't think were going to come in. Margins that you think, hey, I need to make 60 to replace that. Let's go ahead and call it 80 just to be safe, right? So live your life by those margins, run those preliminary numbers so that you actually know what's going on. And also do this with your debt. We're going to talk about what happens if you're already in debt, but do the same thing with your debt and figure out, here's the deal, here's the interest rates. I'm going to get buried, and this is how fast it's going to happen, right? Know those hard numbers, because oftentimes what people do is when they fall into debt or when they're entering in and being cavalier about starting a business is they're not looking at the hypothetical scenarios of what if I have a credit card with 23% APR and I don't pay it even the minimum for 12 months, right? They don't realize just how fast that adds up. So have the numbers. Best decisions are made in numbers. If you are not making decisions based on numbers, you're making speculative decisions, and that's a recipe for disaster across all areas of your business, including getting yourself into debt. So the next thing, and I'm going to be a little bit blunt here, and if you've already done this, I'm sorry, but for those that are thinking about starting out and you're watching this video, only a fool starts a business on a loan, all right? And there's a variety of reasons as to why, and I understand that back in the day that loans were what you did, right? And that was the way to start a business. First of all, it's going to be very difficult for you to get a loan at this point to start a business. They're not going to give you a business loan, period, right? And honestly, you probably want to get a line of credit or a credit card with a major bank, maybe, I'm not going to say it, pretty much any bank, right? Good luck, but unless you leverage yourself and put up the collateral, put your name on it, they're not going to, and it's a personal credit card. Unless they see 2 years of tax returns, they're not going to give you a line of credit. I grew my first business, from $50,000 my first year to $500,000. But since I only had 1 year of tax returns, they would not, and this was Bank of America, would not even give me a credit card. Even though they could see the actual growth of over 1,000%, still wouldn't give us a credit card because we didn't fit inside their box. Now, you can go to some local credit unions and stuff like that maybe can do that. And if you're doing it for working capital and for cash flow management, that's entirely different than what we're talking about. What I'm talking about here is taking a loan or taking a line of credit so that you can get your idea off the ground. It's 2019. There's no reason you should do that, right? So what I recommend you do is start putting out content that's relevant to what it is that you're trying to do. Start going to networking events in your free time to serve at the local level before you're trying to scale your efforts online or to scale your efforts just in general, right? It's not just an on or an offline business type thing here. There are ways that you can get an MVP, which is a minimum viable product, off the ground without incurring substantial overhead. Keep yourself lean and mean as long as you possibly can. Keep your job as long as you possibly can, or keep your side hustle as long as you possibly can to keep funding your business and what it is you're trying to do. Do your business on the side if you have to, but do not. If you've done this already, we're going to talk about how to get out of it. But if you're thinking about taking a loan to start your business, I'm going to tell you right now, I've pretty much 9 times out of 10, if not more than that, I see that result in major epic failure and a lot of pain and heartache. So really seriously, avoid loans, avoid any kind of personal debt that you're incurring to grow or to even start your business. All right, so the next thing, and I'm going to tell you a quick story because, all right, I'm going to rant at you a little bit here, and I'm sorry, but you're going to have to just deal with this because I see this a lot, and I have clients and I have students that do stupid shit, right? And it drives me crazy. I want to freaking bang their heads together over this crap. So you have to want this, okay? Like, entrepreneurship is not a career, it is a lifestyle, all right? You have to embrace everything about it, or you are wasting your own damn time, okay? And that's just the reality of the situation. So recently I had a friend, and love him as a friend, but as an entrepreneur, he's not going to make it, guaranteed, because he ended up, he was an executive and had a job paying him almost $200,000 a year, right? For a technology company here where I live in Austin, Texas, and decided he went to a Tony Robbins event, got all excited, and quit his job with 2 months of reserves to live off of, which that's a whole nother conversation about why he had a job making almost $200,000. All he had was 2 months worth of expenses covered. Concerning. So anyways, and this is not me putting him on blast. I'm not going to throw his name out there because whatever, it's not appropriate. But here's the deal. He comes to stay with my wife and I, and asked us, came to us like, hey, I need a place to stay. I'm in transition. I'm interviewing for some jobs, whatever, because he'd been out of work for like a year trying to grow his business. Well, guess what? Business wasn't growing. He had like $30,000 worth of credit card debt. And here's the deal. Dude is driving a 2-year-old, but bought a brand new Tesla model, whatever, doesn't matter. $76,000, almost $80,000 car. Between the car payment and the insurance, paying almost $2,000 a month, and had a $2,300 apartment that he only got rid of because he was completely out of money and basically just had to buy out of his lease. And he was flat broke. He was Ubering basically to get by and like basically couldn't even hardly feed himself. But here's the thing. he comes in and told me this. He says, I would rather essentially be homeless than to sell my car. And I interjected, and I was like, no, you would essentially rather be a burden and an inconvenience on other people than to sell your car, right? And so here's the thing. I see entrepreneurs, they have this standard, right? And we live in America. For those that are watching that live in America, you probably understand this. And this is the standard that we have deemed what is how we're supposed to live our lives, right? When you're an entrepreneur, that shit goes out the window. You're going to have to throw your ego, throw your pride, throw everything out the window, because if you care enough about this shit, if you care enough about succeeding, none of that bullshit material stuff should matter to you, right? Because this thing you're trying to build is all that matters, and you should be consumed by it. I've had to make ridiculous sacrifices beyond belief, beyond what I'm honestly sometimes willing to admit, because it's so embarrassing. I've jogged to my office because I didn't have gas money to actually drive to my office when we were starting my business. I did laundry in my bathtub because I was too embarrassed to call my parents and say, hey guys, I screwed up, because all in all, I knew they didn't agree with my decision to leave my job and start my business. And I knew that I had to own and accept the consequences of that decision, right? And that was my responsibility to do that. So I made a decision. Look, I can't buy groceries and do my laundry at the same time. So I went and I bought canned foods, and I did my laundry in my bathtub, and I hung it up all over the place like a laundromat inside my apartment. Mind you, my apartment was not in a good place, and we had actually read reviews where just months prior there was a bad drug deal where somebody was shot and killed. The place was cockroach infested. It was nasty. The roof caved in the bathroom. It was disgusting, right? So I'm not telling you to go to that standard, just to go to that degree of swallowing your pride. But here's the deal. I'm just telling you my situation. There was nothing that was going to stop us from succeeding. There was nothing that was going to stop me. No material thing, no nothing was going to get in my way of doing what I had to do to succeed. And this is not me patting myself on the back. This is me giving you some tough love if you need it, right? To say like, look, how much do you want this shit? How much do you want to succeed? How much do you want this business to thrive? How much do you want to see this vision become a reality? Because for me, there was no limit other than selling my soul to the devil himself that I wasn't willing to go to for my business to succeed. And that's the reason why from that point forward until the next year, not even 12 months, 8 months later, we went from that 50,000 low margin business, so I couldn't support myself and the business as well, to $500,000 and then 1.2 within another 6 months, right? So we went from 50,000 living in a cockroach infested place, doing laundry in a bathtub and all that nastiness, into less than 18 months later, a multi-million-dollar company. Why do you think that's the case, right? Because here I made a decision that nothing was going to get in my way, and no stupid societal standard was going to stop me from making the sacrifices that need to be made. All right. So if you needed that message, that was for you. But don't come at me with nonsense, or somebody with nonsense about, oh, well, I need my Netflix account. Oh, I need my $100 gym membership. I need my Yeti cooler that's $250. All those things are what that person told me, by the way, that still had all of those things. Doesn't even have a home, but has YouTube TV. Does it make sense? No. So I don't want to hear it. I don't want to see in the comments below. I don't want to see you saying, but you don't understand. Yes, I do. And I've been there, and I've made the sacrifices that were needed to be made. So understand that sacrifices are going to have to be made. If you're in debt right now, if you're thinking about starting a business, you better go and just start cutting stuff now and just understand and embrace that, because that is the path to success that I've seen over and over and over again as successful entrepreneurs, is willing to make those sacrifices. All right. I still love you. All right, so the next thing is, and this is kind of something I was talking about before, and I would really stay away from this, but I went to Bank of America, and this was terrible advice. So this is why I'm telling you this story, because it's really important that you know this. Went to Bank of America, talked to like the regional, president of small business, something to that effect. I don't remember. Anyway, so I was brand new, in my early to mid 20, like almost like 24-ish, something like that, and was taking on my business full time. We had done it as a side thing, and then I was now taking it on full time. I quit my job. Didn't make the transition, just jumped in with like not even a month worth of savings, just really stupid stuff that I don't recommend you do. So here's the thing, I've made the mistakes, right? So if you're in it, don't feel bad. I've made the mistakes too, and everybody makes the mistakes. So hopefully you can learn from this, and we can get you out of it, or we can prevent you from this happening to you if it hasn't already. So he basically told me, look, 2 years of tax returns, all that same stuff, whatever, and stuff I just told you, like that's pretty real. And especially for big banks, you're really just a number. You have to fit inside their box, and if you don't, they're not going to get approve you for anything, right? They don't even approve you for a $100 credit card, business credit card. So he said, you're going to have to fund your business personally. Just use your personal credit cards. Well, that spirals out of control, because what happens is when you end up in debt, then you're back into a corner. When you have no credit, no cash, you're in big trouble. So I would avoid that at all possible, and I wouldn't deem that as as a viable measure, right? I would understand, and I would pretty much put credit cards aside and not fall into that trap and just live off a cash basis. That's the biggest advice that I could recommend you do, is figure out how to live your life on a cash basis, because you have no predictable income, right? And so if you can just live on the cash and not have to worry about, once you have interest to pay for, right, that is unnecessary pressure, and it's just going to bleed you dry. So I would stay away, even if it's, we talked about business credit cards, but I would stay away from personal ones as well. I would make sure that before I left for that business, I would make sure that with my job or whatever, right, that we paid off all of our debts before we started the business. I would make sure I was completely debt free before. And then here's my rule. I say at least 6 months worth of savings, right? So you need to be able, Robert Kiyosaki says this, the true measure of wealth is how long you can live doing what you're currently doing, right? And so if you can't go more than 6 months without, going into massive debt, then it's not time to leave your job. So start making the sacrifices now. Start cutting the unnecessary expenses now. Start cutting the subscriptions now. Stop going to the movies now. Save up 6 months at least before you start even thinking about making the transition into your business. So, and honestly, that applies too if you're already in debt. It's going to be the same process. Cut everything, cut, get down, get skinny, figure out the plan, reverse engineer, like I said, with the spreadsheet, and start paying stuff off on a cash basis. Don't just say, well, this credit card, this and that, and I can maneuver this, and this. I'm a Dave Ramsey guy, and so I believe start with the one that's going to be easiest for you to pay off if you're in debt, right? And start to get that velocity towards paying off those debts. Pay one off, build motivation, build momentum towards paying those off, but nail one first and get that paid off. Now, it's a little bit different, like I said, when you're an entrepreneur, because you don't have predictable income. So I'm going to talk about that here in a second. Okay, so a couple tools I want to recommend. So analyze your true expenses. A lot of people just don't realize, like, oh my God, I didn't even know I was getting charged. I didn't even realize I was paying for that. So you want to live your life on Mint. So if you don't know what Mint is, it's an Intuit product, and it basically allows you to it's like an accounting tool. It is an accounting tool for your personal expenses, right? So you categorize them just like you would for a business. You have basically a chart of accounts of all the different expenses, and what it'll do is if you set limits, right? If you understand what your true budget is by doing those numbers, what you can do is say, here's our budget for entertainment, right? It's $50 a month. Well, you're going to get a notification if you set it up appropriately and actually keep it up to date that says you're over your entertainment budget for this month, right? So you can keep things within a reasonable amount, right? So whatever you're anticipating you're going to make sure that whatever your expenses are substantially less than that, and then factor that into your Mint account so that hey, here's the deal. We can't go to the movies, but hey, there's a community place where they're doing a screening, right, somewhere that we can go to the movie there, right? We can rent or whatever. Like we have some kind of a budget, just not the big budget, right, that we were using before. So find ways to work around that. Other thing I would recommend using is called Truebill. Now, I haven't used this personally. I've just heard a lot of really good things about it. But Truebill basically will notify you of any recurring payments you might not be aware of. So what it does is it pulls up, here's the stuff you're spending. And I've heard on average, the most users save $3,800 a year using that, just because there was stuff they're being charged for that they weren't even aware of. So definitely something to look into. Like I said, I haven't used it myself, but I've heard really good things about it. So between Mint and Truebill, those are really going to help you kind of whittle it down and make sure that you're keeping your expenses within reason. And that applies to whether you've already started or you're in debt, right? So making sure that here's the deal. We got a skinny budget, and we know we've cut everything down, and we're keeping track on Mint. That alone, guys, the average person that uses Mint, I think, don't quote me specifically, but I want to say has an average credit score that's 150 points higher than a person that doesn't use it just from using Mint. So again, it's seeing the numbers objectively. Don't try to store stuff here. The brain is bad with that stuff. The brain is not your hard drive, right? Get stuff down on paper, keep it updated, know what's going on. That applies to whether you're in debt or whether you're not in debt yet, but you're planning to start a business. All right, so there's two ways that I would suggest to start a business, right? And this could apply whether you haven't started yet again, or if you're already in debt. This could work either way. So side hustles and weekend warriors. Now, preferably you would do this before you started the business, because I don't like going full force into business and then having to take a step back, but it might be necessary, okay? So you need to analyze your situation and have an objective and honest and open conversation with yourself and with your loved ones about where you are with things. I don't like losing velocity. So usually if you started it and you're in debt, I like picking up side hustles and keeping your business the main thing, contingent upon how bad your situation is. What does it mean though? Side hustles, all right? So gig economy is fantastic. So whether you're Ubering, maybe you've got an extra bedroom, you Airbnb it, whatever, like those are great opportunities. Maybe you do TaskRabbit, Uber Eats, DoorDash, whatever, right? Just ways to start making money. Ideally, what you can do is figure out on Mint what your expenses actually look like, and then figure out how many hours you would need to drive or do these various things, or how many times you have to Airbnb to at least hit those expenses. Because if you have 6 months or more saved up, right, like we talked about, then what you can do is figure out a way to just break even, right? You're not going to get ahead, but you're not going to fall behind. Or even if it's couple $100, maybe it's $500 a month that you're in the hole a little bit, like, you know what your personal runway looks like, but try to offset it as much as possible. So realistically, maybe you can work on your business 20 hours, and maybe you can do your side hustles for 10 to 20 hours, right? And you're working 40 to 50, you're not working 90 hours a week or being crazy because you're going to burn yourself out. And please don't do that, right? That's why you have reserves in place. The other thing is you can be a night and a weekend warrior, right? So we talked about that. That's you keeping your job or going back to a job, which not ideal, I know, but doing that and then setting up time where you're working 10 hours to 15 hours a week on your business, right? So you know you have a guaranteed income coming in from your job, that you're paying for your expenses, and you're growing your business slowly on the side. And there's ways in my other videos you can watch as far as how to prioritize the things in your business to be able to, you know, keep growing it even at 10 to 15 hours, just focusing on the essentials and what's going to really move the needle forward. Even if it's a slow build, that's fine. What I don't want you to do is 6 months later, you've burned through $60,000. And I've had clients where that's happened, guys, where they went in and took their entire retirement, their 401k at 55, 60 years old, put it into a concept that had massive overhead, sunk everything into it, and then it was gone. They had to go back and basically start over again with no retirement, no 401k, which that's scary. And I don't want to see you in that situation. So that's not the ideal, obviously. So what I usually say is people that are younger, side hustles are great because you've got the extra energy. You can go drive around and you don't have responsibilities and family. So nights are great. You work on your business from, you know, let's say 9 to 5. You get up at 6:30 in the morning. You drive for 2 hours, 6:30 to 8:30 for Uber, let's say. And then nights from 5 to 7, right? And so you're working on your business all the hours in between, right? And you're still working semi-normal hours, right? So if you have a home and you are married and you don't have kids or something and you feel okay with doing Airbnb, that's a great way to pull in extra income that's going to sustain you for that long run. Or let's say you are young and you have a futon, right? Somebody might be coming in town. I live in Austin. There's all kind of conferences and concerts and stuff going on, and it's a very desirable Airbnb market. So you could charge $50 a night for somebody to sleep on your couch. Well, that's your groceries probably for a week, right? Or at least majority of your groceries. So no eating out, no nonsense, no shop at Aldi. Like there's a million different budgeting type advice that I could give you, but obviously not in a 20-minute YouTube video here. But that's my recommendation. So side hustles, primarily for younger people, night and weekend warriors. If you have real responsibilities like mortgage, kids, private school payments, stuff like that, you're going to be a night and weekend warrior. If you have to fall back into either of those, if things aren't good and you want to keep working on your business, adjust the time you're spending on each in accordance with how bad your situation actually is. All right, so the other thing is you can get spousal support, right? So let's say your husband, your wife, whoever, they understand this is the situation, right? And so they know that they're going to be the ones that are providing, and you kind of have that understanding. Make sure the expectations are defined, make sure they're set, because that person is going to get upset if they're the one spending majority of their check to pay off the debts that you're incurring for your business, right? So just make sure that you have spousal support. This is primarily before you enter into the debt, not after. But if you do enter into the debt, make sure this is a collective group team effort here for you to get yourself out of it. And sometimes if that person has a good job, you can go get a part-time job, still work on your business, and you guys can collectively start working at chipping away at that debt. Okay, so let's talk solely about what to do if you are in debt. All right, you are in it. And don't be afraid, because I've been at a point where we were in over 6 figures worth of debt when you count student loan debt and you count business debt, right? So it's been a lot, and you can quickly turn things around to the point now where it's like not even a big deal. Like we make that in a month, literally. So it's not a big deal. You can get yourself out of it. It's totally okay, and things are going to work out if you do all the things I've talked about so far. But let's talk about what to do if you are in it, because the biggest thing is going to be here, right? It's the mental, it's the emotional challenge of dealing with that, and that starts to affect your efforts and what you're doing in your day. So the first thing is, don't freak out. All right, so what you need to understand is that you are not the first person this has happened to, and you won't be the last. And you need to understand this too. So debtors and collectors, what they end up with businesses, with commercial accounts, they can be way more aggressive, and they can say way more stuff, right? About they're going to litigate and they're going to take you to court and all this stuff or whatever, right? So they're way more aggressive than what they're allowed to do. There's very intense restrictions as far as what they can and can't say to individual consumers that have debt, right? So they can say a lot of things and they can do a lot of things that they can't otherwise do. I've had them show up in my office. I've had them have the police, the sheriff deliver, a notice like they were, they were going to sue the company and stuff like that over like $1,400, like a $1,400 credit card debt with a company credit card, like just ridiculous links that they can go to. So don't freak out. Just understand they're allowed to go to those next levels. Oftentimes what I do is I just ignore it, right? Because here's the thing. If it's a minor debt, right, I'm talking like under $10,000, right? And you may think, oh my God, it's $5,000. It's to a company like Bank of America or something like that. Like that's chump change, right? That's nothing. So it's going to cost them more money to litigate against you and actually pursue that debt than it's going to be for them to just, basically they're just going to heckle you because they know they can't. So oftentimes what happened with me was, and we're going to talk about the difference between the business debt and actual personal exposure because that's important to know. But if it's strictly a business debt, right, and they know that you're potentially going to go out, they're going to push and try to get the money. Oftentimes people just get scared and they pay it, right? So make them come after you, make them do those things. Don't freak out, right? Because oftentimes, like I said, they're going to look at it and they're just not going to pursue it. If it's a business debt, purely a business debt, and the ship's going down, right? You're not going to turn it around, or you're in the process where you just can't pay it right now. It's going to kill your business to pay it, right? Make them pursue you, right? Make them do that, because oftentimes what they'll do is they're going to say, hey, you know what? Here's the deal. Like, will you settle? Will you work something out? But you need to leverage. You have the power. That's the thing people don't realize. When you're in debt, you actually have the power. They're coming after you, specifically if it's a business debt, because they know if the business files for bankruptcy, the money's gone, right? So you need to leverage that and make sure that you know you're in the driver's seat here as much as maybe they make you think you're not. So understand that and make sure you know, here's the deal. I'm going to stay calm, stay cool. We're going to pay it eventually, or we're going to settle this eventually. But right now, I'm not going to freak out and just give out credit card information. There's many people that do that, and they try to pressure me to do that. It's just, what can you pay? Just throwing stuff at me. Just, what are you going to do about this? You need to handle this. This is responsible, kind of giving me lectures and stuff like that. And I just had to turn it off, right? I just had to turn it off and ignore it. And the business blew up and grew, and then we handled things, right? Like we were supposed to, like we were, like we should do as diligent and responsible business owners with integrity. So that's important to know, because they are very, very, very aggressive. And if you've been in that situation, you know how aggressive they are. So here's the thing. Understand debt validation. That's going to be a magic word for you. And understand personal guarantees, right? So I had a $15,000 credit card debt, business credit card debt with Bank of America. Now, most of those banks, when they give you a line of credit, they do require, if you're a startup, a personal guarantee, meaning you're signing off to say, if the business can't afford this, I'm going to cover that debt, right? So oftentimes what happens when you require debt validation, which is them actually showing you the paperwork where you signed off and said, I'm going to assume responsibility for this, they can't find the paperwork, right? Because for whatever reason. Now a lot of them are storing it digitally, but at the time when we had that, it was actually signed in paper, and whoever that representative was just overly eager to get us to sign up for a credit card, because it's probably, he gets a commission or something like that for doing so, that they couldn't find him and he couldn't find the paperwork. So that $15,000 went kaput. They couldn't pursue it any further because they didn't have, to the business they could, but not to the individuals, not to myself or my partners. They come after us, even though I know for a fact that there's a likelihood that we signed it. I don't know that for sure. I don't remember, honestly, but I'm almost positive that there was something in there about a personal guarantee, but there was no paperwork. We said we required debt validation. They couldn't provide it. Dunzo, right? So that's really important to know. Personal guarantees, debt validation, understand those things, because if you don't have a personal guarantee, it dies with the company if the company dies. So it's important to know that. Okay, so talk about this. If you're on the hook, just wait, settle, especially if it's a business debt. It's going to maybe ping your credit, and that's fine, but you're in a situation right now where you need the cash, right? Because if you're trying to get yourself out, the cash is king, right? So you need to make sure that you're okay. You're in a good position where you can start chipping away at it. I've gotten really good deals where I was in a bad situation and they offered us like $60 a month for, a $5,000 business loan that we took, and we're only paying like $68 a month, right? It's manageable versus me freaking out and just paying $5,000. So don't forget, like I said, you do have the power in this situation. So it's not ideal, but you may have to go back to work. You may have to pick something up. You may have to pick some side hustles up. You may have to go back to a part or a full-time job if your situation with your business is gone awry and you want the business you want to still pursue it, right? So find ways to kind of scale back what you're doing with the business, go back to the job and start working on that. All right, so talked about this. Oftentimes, extremely friendly payment plans are extended over a lengthy period of time. So they might extend something to you over multiple years just to get you on the hook for paying something that they're drafting from your account. So another thing a lot of people are going to tell you, I would just cut up all the credit cards if you're in debt. I would just get rid of them. I'm a firm believer of not just putting things on credit, but paying cash for things, right? Doesn't mean that I'm not, I'm completely against credit cards, but if you're in debt, the first thing I would do is cut them up and live on a cash basis like I talked about. So if you can consolidate and things of that nature, that's fine. I trust your judgment on that. If there's one that has a lower interest rate and you can maneuver things around, but don't think that just because you're maneuvering things around that you're this financial wizard and you're just going to maneuver your way out of it. I've never seen somebody use debt to leverage debt to get out of debt, right? Eventually, you're going to have to resort to a cash basis and start paying these things off, right? So I would pull back. I would look into the teachings of like a Dave Ramsey, who I really recommend, more so not for business owners and entrepreneurs, but just good general business or good general advice as far as debt's concerned, as far as digging yourself back out of it. But you're going to need cash, an infusion of cash. And I would just live my life on a cash basis if you haven't done all the things I talked about earlier in this video. Okay, so liquidate unnecessary assets, right? So one of the things you can do is, this is particularly if your business is closing, just start selling stuff. If you have a lot of overhead, just start selling things off. Things in your home, start selling them off. Maybe you have a car that's worth $15,000 and you can go buy something for $5,000 and you can, liquidate and have an extra $10,000 of cash to play with. These are all things that I've done. We've sold things that are extremely sentimental to us. Things like video games and consoles and, TVs and, whatever stuff that like we purchased that right now just aren't serving us, right? This is not important. We need to get ourselves out of this hole that we're in. So there's amazing opportunities for you to put stuff on Let Go, or, I guess eBay is still, popular, not as much as it was before, but there's ways you can move things, Facebook Marketplace, so on and so forth, where you can move stuff and have some cash, have an infusion of cash to get you over the hurdle. Old phones, maybe you sell your iPhone and go back to a cheaper phone for the time being, right? These are temporary sacrifices. I don't expect you to do this forever. But really readjust your standards like I talked about before, right? There's nothing that should be in your life that's more important than you succeeding and getting out of this debt. Don't prolong your pain over emotional things, like material items. It's not worth it. You'll get to a point if you end up growing your business where you can buy 10 of them, right? So make the sacrifices that are necessary. Liquidate those things now. All right, worst case scenario is the business closes and files for bankruptcy, right? So I always like to put in what's the worst case scenario in my mind. And that way I know like the worst that can happen is what? I'm not going to die, right? Maybe they come and take stuff from the business, right? We have an asset that they come, and that's a long process of them being able to actually come and start taking stuff from you. It doesn't happen overnight. Everything churns so much slower than what you think. They make it sound like they're going to come after you and take you to court tomorrow. Dude, it's a lengthy, drawn out process for any of that stuff to happen. And if you get freaked out and handle things now, like like they're going to pressure you to want to do that, just understand that the wheels turn so much slower than that. So you have time. You have time to acquiesce and to make plans in accordance with that. So the worst case scenario though is that your business, you have to close and you file for bankruptcy and you tell people, look, the company's insolvent. Like we're closing the business. And they said, have you filed for bankruptcy? And be like, no, we have no money. Right. And sometimes they're like, okay. And you'll never hear from them again. Right. And I had a guy say, well, this is your responsibility, because this is your business. But when I said the company's insolvent right now, like we can't pay this. Right. And I'm not going to there's no personal guarantee and I'm not going to do it. Never heard from him again. Right. That was the end of it. So in that situation, I had to close that business and it sucks and it's painful, but it happens. Right. And so I save that for last because that's not the first thing that I'd like for you to do. I'd like for you to get yourself out and honor your debts with integrity. Right. Because you made the mess. You need to honor that if at all possible. But also recognize that this country was structured the way that it was for a reason. And there are times where you shouldn't go die on the hill with your company, right? It happens all the time. And oftentimes, that you have those protections in place for a reason. So hopefully you filed an LLC. If you're planning to start a business, sole proprietorship, there's no distinguishment between you and the business. You are one and the same with the business. If you filed something like an LLC or a C Corp, an S Corp or something like that, you do have that layer of protection, right? So make sure that you utilize that in this situation because sometimes people can find themselves in massive personal debt, assuming debts that they actually weren't responsible for that actually should have died with the business. So that's the end of this video, guys. I know I threw a lot at you in a quick 30. I'm at 33 minutes now. Hope you guys like this video. For more of stuff like this, that's a little bit more uppity up and a little bit more joyful to talk about and explore, make sure to subscribe. You can also bounce on over to listen to my podcast, Entrepreneur Hour Podcast with me, Chris Michael Harris. Make sure, like I said, like, subscribe. Comment below. Let me know if this is, a situation or something that's helped you. Share it with a friend if you know somebody that's starting a business is in massive debt that really needs some help. Maybe share this with them as well. And I'll see you guys on the next one.